Hey, happy Saturday. Wanted to come to you with some data based on what happened with the Fed this week. I think everybody knows the Federal Reserve lowered the Fed funds rate the first time in 4 years. So I just want to come with some information you can use to talk to clients about. I'm going to bring up a screen really quick and just make sure we talk through some of this information so you can have some good data to use. So first, the Federal Reserve has not lowered rates for over 4 years. They lowered them and obviously kept them lower during the COVID situation, and then they've inched them up to slow down inflation. I think we all know that. Finally, what's happened is inflation numbers and jobs numbers are starting to come back in line with the expectations, still elevated, but starting to inch down and giving reason for them to have a soft landing here. We had the Fed funds rate just drop. They've lowered that this week by 0.5 point. The Federal Reserve, the Fed funds rate is an overnight trading rate, so it's super short term. It's literally only 24 hours overnight trading rate. So it's important to know that. The other thing is we have a change in mortgage-backed securities. So the big question we have is, well, what happened with interest rates as this happened this week? So this is the mortgage-backed security market, and what we had on this week, we've actually had almost a flattening of what's happening with the bond market. Now, mortgage-backed security market is actually the only thing that directly impacts interest rates as money flows in and out of bonds and mortgage-backed securities. It pushes interest rates up or down. So as money flows into that market, it actually pushes rates down. As money flows out of it, those rates will actually go up. So we actually saw a good movement here. We saw rates we got a lock alert on August 5th based on after the jobs numbers came back bad on the 2nd. We got a lock alert here. Rates actually got worse, and then rates are finally getting better again. If we actually look at the 30-year fix on this, 30-year fixed, this is actually an average rate. We really didn't see too much of a move based on what happened this week. Actually, some indicators actually show the interest rates have gone up a little bit. We had the 10-year Treasury. If you look at the 10-year Treasury here, 10-year Treasury actually went up. So a 10-year Treasury has an indirect relationship to interest rates, long-term rates. But generally, as the 10-year Treasury goes down, we actually see interest rates also go down. So very similar. But we actually saw the 10-year Treasury bounce after the news and go up. So there is a chance here that rates actually go up during this time. So that's why it's important to understand that we might want to talk to our clients that if they are waiting for an even lower interest rate, this might actually be a really, really, really good time to do it, because we haven't seen this low of a rate. We have to go back to February 2023 to really see rates in the low sixes. Some of these deals are in the high fives based on, what the situation is. If you're doing different buy downs or whether it's FHA or VA, this is an average here. It just gives you kind of a good track record. The concern that the market has is if we do have any good information on the market overall. So let's say inflation numbers are actually still elevated, let's say, or if we have good jobs numbers. Think about coming into a holiday season as people are maybe working more during the holidays and they ramp up employment because of that. Even sometimes the short-term employment will actually boost up numbers, giving kind of an artificial number to the jobs numbers. So that could actually hurt interest rates short-term. So if you do have any buyers or sellers out there that are motivated to do something, I think this is a good sweet spot. If you have buyers out there, it's extremely important to be just voicing, hey, we have the lowest rates we've had in the last couple of years. This is a great time to get off the fence, start crunching the numbers. The difference with this market, though, than when the rates were super low, as you guys know, is we can negotiate. I just helped a family get $15,000 seller credit as we're trying to put the deal together, right? We got to try to make it a win-win for everybody, win for the seller, win for the agents and the buyers, of course. And so how do we put these deals together to make it work for everybody? That's really the key here, what we want to do and help you with. So hopefully this information is helpful. If you have any questions around this, shoot me an email back. Let's jump on the phone. Let's do kind of go through and answer any of your questions on what we're seeing real time as far as interest rates. Again, happy house hunting with your clients this week. If you have any sellers out there, I think this is a good time to get it listed, right? Get it listed while we have this tailwind, while there's a little less competition. I think spring we're going to have a lot more listings come on from what our projections are. It will be a pretty active spring. So if you have listings that are saying, hey, I want to wait, well, let's get that thing listed while we have this tailwind of these lower rates and you're not saturated with other competition out there, okay? So again, hope this helps. If you need anything during the weekend, I'm here for you. Shoot me an email back, comment, or text me 480-553-8770. Have a great weekend, and we'll catch you on the next Saturday Strategy. Thanks again for watching.